Hello everyone, welcome back to another video. Hope you guys are doing well. Are you curious to learn about record to report? Then look no further, because in today's video, we are going to talk about what is record to report, why it is so important, what are some of the key activities which we perform in record to report, and so on. So without any further ado, let's get started. You are watching CorporateWala, helping you get your dream job. So first thing first, what is a record to report process? In a nutshell, record to report is a business process which holds a critical role in accounting and finance. It is a crucial component of company's financial integrity and transparency. Whether you are a fresher who is preparing for their interview or an experienced candidate want to upskill themselves, it is very important that you learn and understand the basics of record to report process. Okay, great. Now some of you might ask me, why does record to report matters? What is the importance of it? So let me tell you, record to report is a very important business process in any organization which helps them in ensuring that the financial statement which they are preparing is accurate, consistent and compliant with rules and regulations. R2R not only just boosts the confidence among the stakeholders like investor, creditors, management, etc., but also help them in ensuring that they are making informed decisions by analyzing the company's financial statements. Okay, great. Now let's talk about some of the critical activities which we perform in record to report process. So the first and most important activity which we perform in record to report process is data collection. Now, what do I mean by data collection? The process of collecting data from various sources like invoices, bank statements, receipts, payments, invoice. The collection process of all these documents is known as data collection. Second most important activity which shapes the record to report process is journal entries. I'm sure all of you must be aware what a journal entry is, so I don't think I need to explain it in detail again. But yeah, in a nutshell, journal entry is a process of recording the transaction which we have collected in the first step. Once you have completed your journal entries, those entries will get posted into the journal ledgers, and then you perform your account reconciliation, which is another critical activity of record to report process. So what do you mean by account reconciliation? Account reconciliation is the process of verifying that whatever entries you have made in your ledger, those are correct or not. So in account reconciliation, what do? We compare the source data with the journal ledger balance and we identify if there is any variance or not. If in case we identify any variance, we need to take the corrective action, whether by posting an adjustment entry or by eliminating any additional data. The fourth most critical activity in the record to report process is month-end close or closing of books. Now, what do you mean by closing of books? So, at a specific point in time, what do? We close the ledger. Whatever ERP we are using in the ledger, we close the period for that particular month. For example, if we are using SAP or Oracle, what we will do is, we will close that particular period after a predefined cutoff date so that no one can go back and post another journal entry in previous month. Why do we want to do that? Because let's suppose if you have completed the close and based on the journal entries which you have posted, you must have prepared the journal ledgers, account reconciliations and your other important reports as well. Now, after you have published your reports, if someone will go back in the period and book any journal entry, what it will do is, it will show that you are showing incorrect reports or you are reporting your number incorrectly. So to avoid that, what companies do is, once they have passed through a predefined cutoff date, they close their books, that is, they close the period, so no one can go back and book any entry in the previous period. So in a nutshell, this is the process of closing or books close. And the last but most important process of the record to report is reporting. So what do we do in reporting? Whatever transactions which we have posted earlier, account reconciliations which we have prepared, based on that, we prepare some of the predefined reports like balance sheet, income statement, cash flow statement, etc. So these reports are the main reason because of which we perform all the other activities of record to report process, because we have to share these reports with the stakeholders. Okay, great. Now let's talk about some of the key sub-process of record to report process. So there can be so many sub-process in the record to report process depending upon the company in which you are working, the size of the company, the industry in which they are operating. So there can be multiple factors which will decide what kind of sub-process that company will have in record to report process. But majorly in record to report, you will see processes like journal ledger, intercompany accounting, fixed assets accounting, month-end close, consolidation, financial reporting, and variance analysis. If you want me to make a detailed video on these sub-processes, let me know in the comments. I will make a separate video on each of these topics if you want me to make one. So I hope you got to learn something from this video. If you did, make sure you hit like, and if you have not subscribed to my channel, make sure you subscribe as well. Soon I will meet you again with another informative video like this. Till then, take care. Bye-bye.